Hey traders, John Howell here. Today I want to be talking to you about the importance of trading against the trend is never a good idea, and why some people right now are doing it. And also there's actually I want to walk through a comment that I got recently on my YouTubes, and hopefully this is going to help you with your trading. And I'm coming from a place, guys, that I've made this mistake so many times, and I'm hoping you're not going to make the same mistake again, because it can literally destroy your chances of doing really well long term. But what we should be focusing on anyway. Let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, let's get straight into it. Before I do start, guys, I'm actually giving away free access to my trading course. You can see it all on the screen there. There's actually 4 phases to this trading course. There's your foundations, what goes into a good trader. There's the chart reading, like some really good chart reading strategies. Trading system, my trading system, and also what I call the mindset, what I call the X factor. There's around about 10 hours worth of training in that trading course. There should be a link in the description, or just go to johnsfreegift.com again, and you can get free membership access to that trading course. Now, I want to start off with a comment that someone recently put on my on one of my recent videos here, and one of the most important things to us as traders, and one thing that I've learned the hard way over my last 16 years of being involved in these markets, is always to respect the market. And it's always important to respect. And what I mean by respect the market is, like, if we're in an upward trend and the market says we're going up and there's no sign of it, there's no signs of it sort of stopping right now, then if we think something is going to happen to cause that crash, then it's so important that we don't go with that. It's so important that when we're looking at these markets, the market's always telling us what's going on. And it's all about probability, right? There's no certainties on any position what's happening. And so I know there's a lot of people out there, that are saying, and let me just take a screenshot here, and let me take a screenshot of what I just saw just recently, and this is one of the comments here that I got from the good old YouTubes here. So let me zoom in a bit here. Dennis said low SPY will not be at 5,000. I actually see right now, as I'm doing this recording, the SPY is at 4,420, and I see at least a 5,000 print by the end of this year. That's just what I see. And you might actually think I'm crazy, but I believe over the next sort of maybe 2 or 3 years, we're going to see a 60,000 print on the Dow. John, that's not going to happen. Well, guys, with the inflation that's coming and what's happening behind the scenes with the printing of money, they're not going to stop. And the bond market as well too. I'm going to get to that in a minute as well too with the bond market. But the foundations behind this market, guys, just screams parabolic move coming. Yes, we're going to get our shaking periods, but overall, I see a lot higher prices. Again, call me crazy, but over the next 2 or 3 years, I see a 60,000 print happening on the Dow. That's like, we're at 35,000 right now. So there you go. But I see a 5,000 print happening this year on the S&P 500. If you guys been following me for quite some time, I've had that target for a while, for pretty much all this year, and I also have a 17,000 print on the Nasdaq as well too, where I believe Nasdaq is going to be by the end of this year. And so that's where that comment is coming from. This one right here. Now, this guy right here, okay, and I'm not bagging anyone, I'm not putting anyone down, I'm just using this because I've made this mistake as well too, and that is, it's insane. It seems insane, but I would not be surprised to see 6,000 soon. So he's talking about the S&P 500. Okay, so here's the thing. So we see that this guy here says, okay, I would not be surprised. Let's just make that a different color and make that. I would not be surprised to see 6,000 soon. Okay, so right now, he said he would not be too surprised to see 6,000 on. I guess he's talking about the S&P 500. If we look at the S&P 500, we're at 4,420. I'm calling a 5,000 print. Now, by the way, guys, when I say, if I say a 5,000 print, if we look at the markets, 5,000 print is all the way up here. So that's a 5,000 print all the way up there. And if we're talking about where we are right now to the end of the year, like we're talking about like another 13% rise. Now what he's saying, which I'm not saying, I say at least a 5,000 print and then maybe even that up there. He's saying 6,000. Now a 6,000 print is all the way up here. Now he's saying that he would not be too surprised if he saw a 6,000 print, which is a 32% rise. Now, again, I would actually I would actually believe that's going to happen because I believe we're going to see a 6,000 print, but maybe not this year. I see a 5,000 print this year, but not. I see a 5,000 print this year, but not a 6,000 print this year. It may happen next year. And again, because when inflation happens, guys, inflation and what's happening with the printing of money is bullish for the markets. Okay, so I'll explain that in just a minute. But look at this here. So he said, I know it sounds insane, but I would not be too surprised to see 6,000 soon. I agree with you. And I'm trapped in a short position. Here's the thing. And I'm trapped in a short position. One of the best things that I have learned about trading is that if you know you're wrong, if you know you're in the wrong position, don't sit there and hope and pray and hope and pray and hope and pray. The reason why is this. The first reason is that when you know you're wrong, just get out, okay? It's just just say, you know what? I got that wrong. There's a loss. I'm going to take it. I'm going to move on. And just accepting of that. Now, I know us men, our egos are, we don't want to take a loss, right? And sometimes I've done that. Like I had recently an option expire worthless on me. That was actually a few weeks ago. It's the first time it's happened to me in a long time. Now the option expired worthless, but I think I had 5% of my account on that one there. Now that one hurt, right? But then guess what? My next few trades, my next few trades I made about 7.5 to 10% return on my account, right? So I lost 5%, but then I grew back another 7.5 to 10. So my account is still green and positive. But the worst thing about this situation here, when we say I'm trapped in a short position, you're not really trapped. You just don't want to take the loss. And here's the thing: this is a double-edged sword. Firstly, you're hoping that this market's going to crash based on all these bad news. So you're probably looking for all the reasons why this market is going to go down. Now, we may get a bit of a shaky period, right, where what's happening right now, because we may get that bit of a pullback, but it's only going to be that, a pullback. I believe that we're in a big bull market right now, and there's so much money behind these markets that these things are going to skyrocket. So firstly, it's so important that if you know you're wrong, just get out and don't try and sit there and hope and pray and all that sort of stuff, because you got to sit there. But the double-edged sword is that one thing that's happened to me is that I'd be so focused on this position that I know I should be out, but I'm hoping and praying, and every day I'm praying, I'm looking for every reason why this thing's going to go down, right? And I'm short in the bull market. Big mistake in the first place. I should just take the loss, learn the lesson, and focus. But because I was so focused on that position in the past, when I've had these losing positions, again, fighting the trend, which I shouldn't, not respecting the market, which I wasn't, I would be so focused on that I would not be. I'll be missing out on all these amazing opportunities. And so one thing I realized was that because I was so focused on this thing here, I was actually losing money not only on the short position, but losing money by not actually seeing these other really good opportunities, because I wasn't focusing on really good other good opportunities. I was just focusing on this short-term trade. And so one thing I realized is that so many times of actually doing this mistake myself is that I just realized, hang on, if I just get out and just have a sweet humble pie that I was wrong and it's okay, and just get get myself sorted, get back into the markets, look for good opportunities, have a good trading system. If you're not there, you should have some sort of trading pattern that you should be trading if you are trading the markets. and then get back into it and then start to refocus, and then re-look for some really good opportunities based on a proven pattern. And so this is always a double-edged sword here. He says, I would not be too surprised to see 6,000, but I'm trapped in a short position. Just don't let your ego get involved with this. A lot of the times you're going to take trades based on this, and you're going to have the market is going to learn you a lesson. And then he goes on to say, it will inflate to infinity, but the one crash will wipe out. Here we go. The entire system. Only reason why I'm still holding. Okay, so you're still holding on hope and pray right now. So if you are holding a short position and you see the market at 6,000, which is like a 30% rise, but you say the one thing that's going to come down, that may not be here until 2 years from now. Until, yes, I believe it's going to be the entire system come down. Because what's happening right now with everything, inflation, and also what's happening is because the bond market is so much bigger than the equity market, but there's money always chasing the return. But because the bonds are providing such a low return, there's literally now trillions of dollars coming from the bond market into equity market. So if you're pretty confident about what I just said there, and you would not be too surprised to see 6,000 soon, but I'm trapped in a short position, don't be holding on, because if you're holding on to something that, to me, it just sounds like that you're holding on because you don't want to take a loss, and you don't your ego is getting involved, and you don't want to let that, and you don't want to I don't want to be wrong here, so I'm going to hold and hope and pray that the one big crash. But guess what? We may be 30-40% higher with a big massive melt up by the time we get that crash, and you're completely wiped out. If you're all in on a short, especially if you're all in on a short position, you're completely wiped out. One, you're fighting the market. The trend is your friend. And secondly, there's a massive probability that more money's coming, more stimulus, 0% interest rates, and now trillions of dollars from the bond market now getting into the equity market. Again, I see over the next couple of years a 60,000 print on the Dow. And yeah, we probably could see with the 60,000 print on the Dow, we could see a 6,000 soon. So it's really important that whenever we are viewing the markets, and again, guys, I'm coming to you from a place of I've done these things so many times, and I even did this when the whole Trump was elected, right? I saw that when Trump was elected, I shorted the markets instead of listening to the markets and focusing on good trend analysis and stuff like that. I shorted the markets. But now, luckily, I got out really, really quickly because I'm just like, this is not working. Because then, as you know, what happened after Trump, right? The thing went for a massive bull move for about 12 months. Just kept going up every day. So it's so important that we try not to let our egos get involved. So if you are in a position right now, no matter what it is, and you know you're wrong, and you know you shouldn't be holding on, and you know how you. And the one thing that comes up every day on how you know you just should be out of the markets and just recenter yourself and then look for some good opportunities is if you're getting up every day, which I probably guarantee you this JNS person right now is probably doing this. He's probably looking at and hoping and praying that what is happening right now is going to bring down the entire system. Well, we're probably the Great Reset, as they call it, the Great Reset, that should happen at the end of this decade. So we still probably have maybe at least another 4 or 5 years before the big crash, or maybe we have another 8 or 9 years. Maybe the recession we just had was just the recession, and maybe we're now going to go, maybe that's the reset, and maybe we're going to go through another 4 or 5 or 6 year growth period before we see the whole Great Reset and all that sort of stuff. Like, I don't know. Like, we never know. So if you're confident that you can see a 6,000 print and you're trapped in a short position, and the only reason why you're holding right now is because of your ego. That's the only reason why. There is no reason why you should be short in this market right now. The market's going up. The trend is your friend until the end. And you have all this massive bullishness behind the market. Yes, we're going to see pullbacks and corrections along the way. That's just what happens in bull markets. But it's really, really, really important to not let your ego get involved. Just get out, because if you can get out, center yourself, learn what you did wrong, what you've done right, and then come back into the markets, look for some good opportunities. Because I promise you, if you just hold on and hope and pray, I promise you right now that, especially if you're loaded up big time and you're just waiting for that one big drop, I promise you that there's going to come a point in time where you're going to get completely wiped out because you're short, and all you're going to say is that I wish I never traded the market at all. Please don't let your ego get involved. Just get out of the markets. You know you shouldn't be long the markets. The market is going up. The trend is going up. The 0% interest rates. The Fed hasn't even started. Fed is still doing QE behind these markets, and the bond market right now, the trillions of dollars behind this market. There's a massive probability that we're going to continue up. Don't try and short a bull market. Why? Because a bull market is for that reason, right? And in a bull market, you may have maybe a 10% probability that you're going to pick a top in the markets, and there's probably an 80 to 90% probability we're going to continue that trend. And then in my last video that I did, I talked about what we should be looking for if the market is going to start to top out in the charts there as well too. So please don't let your ego get involved. You're going to do so much more harm than good. You're going to have sleepless nights. You're going to lose so much money. And if you have a partner as well too, you're going to be cranky with your partner. You're not going to be happy with her as well too. And everything's just downhill from there. The best thing to do is just to get out, admit that you were wrong, take that sweet humble pie, maybe take a week off trading, center yourself, and then come back and say, okay, then what am I actually looking for in a really good trading setup? And that's what I'm looking for.